Welcome back to Morning Trade Live. Time to go inside out on cybersecurity. CrowdStrike, Palo Alto, ZScaler. Well, these names have soared. I mean, they're up about 25% over the last 12 months. Alex Hamerstone, director at Trusted Sec, is with us. What about these names? I know under a bit of pressure today, but tell me a little bit about the state of cybersecurity as AI gets more and more advanced.
So cybersecurity is going to continue to grow. Anybody that watches the news sees, all these attacks and breaches and organizations being affected. Not just that, it's that the whole landscape has kind of changed. Over the years, it's gone from talk about breaches and loss of records to really availability. And so we see large organizations losing millions of dollars due to their assembly lines being down or their resources being unavailable. And the other thing is that the number of targets keeps increasing, right? I mean, everything is being connected. And so the market is just going to continue to grow. And, these well-known, kind of bigger names, I think are going to continue to benefit from it.
Yeah, understood. I mean, right now, today, CrowdStrike is one of the names under pressure. When these names pull back, are those buying opportunities?
In my view, yes. I don't have a crystal ball, but I don't think anyone will ever be, go wrong, thinking the market will continue to grow. Obviously for any individual company, there are a lot of different factors that are going to affect its value. But I think, anyone that's ever been involved in a purchasing decision at a larger company knows that going with known quantities, going with big names, is oftentimes the way they're going to go because there's less risk to the decision maker in those cases.
What would you say is a forte of one over the other? Because we put them in this category sort of all together, but they do compete against one another. Is one more of a standout in your mind?
So they're obviously all respected names. I've always been a big fan of Palo Alto's platformization kind of concept that we've talked about here before, and seeing that grow. And I think, the way to think about that is for anybody watching that isn't necessarily in IT is with kind of your home automation type items. You want your speakers and your locks and your thermostat to all kind of be on the same platform and work together because it's much easier. And with any of these, security products, organizations don't just think about the product themselves, but also what it takes to maintain them and implement them and everything like that. So, that type of platformization, I think, can be very effective. But you also have, the CrowdStrikes and the Zscalers that are continuing to, expand, their offerings, kind of dial in on, what the technology is doing. Really focus not just on the perimeter of an organization, but also look at, securing users, devices, apps, et cetera. And I think that as they continue to move forward, that's going to continue to grow.
Right, understood. When you look at the fact that these stocks are near highs and we think about all the geopolitical tensions, you still see that people are going to be running to these, right?
Absolutely. I think, kind of news stories are really one of the best drivers of a lot of these, cybersecurity companies. And again, I think it's that piece, right? There are more threats, but also the attack surface is just much bigger as more and more companies put more and more things online. And it's going to just continue to grow. As I said, I don't have a crystal ball, but I don't think you'll ever be wrong thinking that more things will be connected in the future.
And then what's your takeaway here about the potential for the downside? What is the downside for this group?
I think there's always the chance of new companies coming in and doing something innovative, although it is tough, I think, to get a foothold kind of in this day and age, against some of the larger players. But I think, the other thing is that the environment can change. Somebody might come out with a new technology that makes things safer in a way that we didn't anticipate, right? So some of these companies that are kind of out there protecting, may be affected there. But I think in the short term, I think we're going to continue again to see a larger number of threats and more organizations really looking to known quantities as a way to, lower risk and be in a better spot.
You talked about ZScaler having a great quarter, being driven by the shift to zero trust and cloud native security. Tell me more about that sort of mentality.
I think it's interesting. If you look at organizations, they've really changed over the years, right? From having these, large on-prem instances, a lot of equipment and things like that, and things are really moving into the cloud. And in the old days, where there was a lot of focus on kind of protecting the walls, right, the perimeter, and now there's a lot more focus on also looking at these end user devices, and applications and everything else. And so as you continue to focus on that, organizations that are looking at those things are going to be in a good spot. The other thing is, we hear a lot about AI, right? You can't turn on the TV or open a newspaper and not see AI. And I think for anybody watching, it's really important to kind of understand what AI is and isn't, and whenever someone uses that term, to really kind of understand what they mean by it and how they're using it. And I think that, when you look at these organizations, there's a large opportunity, because the things that AI does well and makes more efficient can very much fit well with their missions.
When we look at these names here, and obviously an incredible run, but you talked about 5 years ago, companies were just happy to throw money at cybersecurity. Sometimes they would have duplicative tools. At this point now, they're looking for more and more results. And organizations obviously are at risk. And at the same time, they have to spend to get upgraded, to get the latest tools, to make sure that they don't have breaches and all kinds of fines and things like that. Will there be the CapEx spending, or the spending that we need on this particular part of life for companies? Do you have any sort of projections? Will we see double spent on cybersecurity over the next 10 years or something like that?
I will say, I think it'll continue to increase. As I kind of mentioned, it's years ago, companies were just kind of, happy to throw money at the problem, right? They were happy to buy a bunch of different tools and a bunch of different services. And they would end up with things that, maybe they had two tools that could do the same thing, or they weren't taking full advantage. I think at this point, companies are really getting more focused on the outcome, right? So they want these tools or these services to provide actual results. They want, measurable lowered risk when they can get it. And so I think that's going to, whether cybersecurity spending overall goes up, I do think it will continue to be more concentrated in fewer companies.
All right. Thank you so much, Alex Hamerstone. Great to chat with you. An important topic. People love to talk about cybersecurity at Trusted Sect. Thank you. Okay, Tom White is with me, host of Fast Market, and you're taking a look at CrowdStrike, which has had an incredible run from $200 to $500 in 1 year. So tell me more about an example trade here. What are you thinking?
Well, it's getting a little bit frothy, Nicole, hitting all-time highs this week, pulling back here a little bit today. But it's, you don't even know that they had an outage last July. Now, the repercussions from that some people expected companies to leave CrowdStrike. It's difficult to change, cybersecurity, for these big firms. So they didn't see any drop off, really. They did give some breaks, but it seems like, the optimism's back in this name, especially using their Falcon, their endpoint type of cybersecurity tools. So that's becoming more popular. Earnings have been really good lately. So I looked at a strategy that, because it's getting a little bit frothy, I want to profit if it continues to go up, but then also if it does pull back, maybe consolidates, you can still be profitable on this. You just don't want it to fall out of bed. So I looked at an unbalanced or broken wing put butterfly to the downside, where you're actually collecting a credit on this. So going out to the July 18th monthly option, so just 3 weeks to expiration, we're going to buy one of the 490 strike puts, just out of the money to the downside. And then we're going to sell two of the 485 strike puts. And then we're going to buy one of the 465 strike puts. So this is the unbalanced butterfly, right? You're buying a $5 wide put vertical and then offsetting the costs on it to collect a credit by selling basically a $20 wide short put vertical. That creates this put butterfly that's unbalanced, we call it. So you're going to collect roughly about a 320 credit on this trade. So what does that mean? Well, it takes your break even down to $476.80 over the next 3 weeks. That's about 4% below the current share price. Now, if the stock remains here, continues to stay above that 490 strike, You just get to keep that credit that you collected, the $320 credit per spread that you collected. Now, where do you run into trouble on this is below that 476.80 break even. Max profitability or max loss on this is going to be all the way down below 465 on this one. You got about $1,180 in risk below that level. Now, the nice thing about this type of trade is if the stock does continue to move a little bit lower, you get a little kicker right at that short strike near about $485 where you sold 2 options on. So it's a neutral to bullish type strategy, but at the same time, you're still profitable in 3 out of 4 scenarios on this one. Stock can go higher, stay where it is, or even go a little bit lower. You just want it to remain above 476.80.
Okay. Thank you for that. Appreciate it. Can we get one more example trade? And that would be on Palo Alto Networks. Your thoughts here?
Yeah, stock's just below those all-time highs above $208 that we saw in February. So it's had a good run here also. One of the key things that I noticed here with this stock as it's, bounced off those April lows like every other tech name and every other cybersecurity stock is that implied volatility levels are really low. The IV percentile ranks only about 3% right now. So what does that mean? Well, it's in the bottom 97th percentile of implied volatility levels that we've seen over the last 52 weeks. So really low implied volatility levels. So I looked at a strategy that if you think this thing is going to, reach those all-time highs, maybe continue to move higher, this takes advantage of it, and it takes advantage of that low implied volatility. So looked at buying a call vertical here. We're going to buy the 200 strike call, just slightly in the money. It's got the higher delta. It reacts more like the stock. And then against that, sell the 215 strike call in the July 25th weekly cycle. So you've got 28 days in this trade, a little bit longer duration. You got a month in this position. You're buying a $15 wide call vertical, buy the 200 call, sell the 215. You're paying roughly about a $5.50 debit. There's your risk, $5.50. That can expand to 15 if the stock goes above 215. Into expiration over the next 4 weeks on this one. But I think, that break even 205.50, that's less than 2% above the current share price in Palo Alto. So you don't need a monster move to the upside. You just need it to continue to grind higher, go to fresh all-time highs. But I think the key on a trade like this, when you're doing a directionally biased trade in that low volatility environment, it's always going to cost you less money if volatility is low on a strategy like this.
All right. And Tom, I'm not going to let you not say something about the record high today. Record high, Tom White. Your thoughts?
Yeah, it just seemed like it was on a tractor beam that we were going to hit that. You pushed aside all the data, the commentary from Fed Chair Powell this week, but you've got supportive assets, right? The dollar's hitting over 3.5-year lows. You've got yields that were trending lower, until today. We were hitting 1.5-month lows in the 10-year yield. VIX is at the levels that we haven't seen since the last time we hit those all-time highs in February. So it seems like the optimism's out there. I'd be wary right here. This has been a retail driven rally. I think institutional traders, going into month end on Monday might have to do some repositioning after that. But maybe this rally continues through the close on Monday. But I'd be careful after that because valuation's getting pretty lofty at this point.
Yeah, right. Do what the smart money does. Tom White, good to see you. Thank you so much.